Hey guys, happy Sunday, February 23rd. In today's video, I want to give you a very quick recap of IMAX's earnings, talk about the price movement since the 19th when they announced their earnings, and what the expectations are for 2025. If you got a couple minutes, let's get right into it. IMAX has been on an absolute tear over the last 12 months from a low a year ago of $13.20, more than 100% gainer recently, last week, hitting a high of $27.77. Don't let any of those gamers tell you you can't make money in the movie industry. In fact, IMAX was one of my larger positions in 2024. I got in at around $15. I sold as we entered what I thought was going to be a weaker Q4, around $24.64. You can see there. IMAX did go a little bit higher after I got out. I locked in about a 65% gain in 5 months or so. Not too bad, but the Chinese market has absolutely been on fire here for IMAX in 2025, and that has helped buoy them up to the price levels that we're at right now. It did come down a little bit after those earnings were released on the 19th, currently trading at $26.03. On its Q4 earnings, IMAX reported an adjusted EPS of 27 cents per share, which missed analyst expectations by about 7%. So a little bit of pullback is to be expected. That earnings miss was driven by lower revenue than analysts were expecting as well. $92.6 million for the quarter, a miss on revenue of 11.5%. However, IMAX executives are very, very excited about the coming 2025 year. Probably will be one of their best years ever. In fact, as you can see in the earnings call transcript here, CEO Rich Gelfond said those exact words. We expect 2025 to be our best year ever at the global box office, projecting more than $1.2 billion in IMAX grosses. If you want to put that in perspective for the past couple of years, you can see here on their slide deck, in 2023, the global box office for IMAX was $1.06 billion. In 2024, $901 million. So about a 20% increase expected for IMAX in 2025. Looking at my red, yellow, green dashboard, which is just a picture representation of some major bucket items you might want to be thinking about as you're evaluating a company for a long-term hold. Almost everything on here is green. The only thing that is yellow is the short interest. I'd like to see it under 10%. It's just barely in the yellow here at 10.79% short for IMAX. As we contemplate the full 2024 year results for IMAX that we found out about on the 19th, a couple of things to look at here on the income statement. Number one would be the overall revenue trend. Over the last 5 years, it is increasing, although we had problems in 2024 not related to IMAX, industry problems in Q1 and Q2. So flat from last year, but we know that 2025 is going to be much better, and 2026 is expected to even surpass 2025. Net income, similar trend with a nice flip from negative to positive over the last couple of years. Shares outstanding is trending down, another bullish signal for investors, as IMAX has used their cash on hand and their free cash flow to purchase shares back from the market and decrease the shares outstanding. We have a nice trend here on free cash flow with a positive annual free cash flow, and IMAX is delivering a gross margin of 55% and a profit margin of 7.5%. Taking a look at IMAX's balance sheet now that we have Q4 and the full year results, everything looking beautiful here on the balance sheet. $100 million in cash and cash equivalents. When we consider their working capital, we have total current assets of $416 million. Total current liabilities of $106 million, giving them positive working capital of $310 million. If you want to step back from there and look at a bigger picture, total assets, $830 million, total liabilities, $452 million, giving them a total shareholders' equity of a positive $378 million. Keeping in mind those current assets, current liabilities, and the working capital, that gives IMAX a current ratio of 3.92. And I'm not going to compare IMAX's current ratio to another movie company. I'm going to take this opportunity to point out the GameStop people who try and tell you that current ratio is a ratio that you would use to value a company. That is simply not the case. It is a ratio that tells you the liquidity position of the company. It's good to have a high current ratio. That means that the company is liquid. However, if you want to know how to value a company, you should use things that the market considers valuation ratios, like the PE ratio. When you're valuing a company to determine if the share price is fairly valued or likely to be shorted down, you want to know, how does that PE ratio compare to other companies in the same sector? And don't let these GameStop people misdirect you by trying to compare GameStop's very high PE ratio to tech companies, because GameStop is not currently a tech company. It is a brick and mortar retail shop. But getting back to IMAX, we look at their trailing 12-month PE ratio. That is the current share price divided by their earnings over the last 12 months. We have a high PE ratio of 54.23. However, we also have underneath that the forward PE ratio. And here for IMAX, as we contemplate their increased revenue and increased earnings for the next 12 months, you can see that although looking backwards, the PE ratio appears very high. When we factor in expected earnings over the next 12 months, IMAX has a very reasonable current share price valuation at $26 with a PE ratio of 20.88, which is perfectly in the norm for the movie industry. Speaking of expectations, where do those come from? Typically, they come from analysts that are covering the stock and understand the financial model of the company. I always recommend that you at least consider an analyst viewpoint. You can agree with it or not agree with it. I don't always agree with them, but you should consider it in doing your due diligence and your evaluation if a company is fairly valued. We have 11 analysts covering IMAX, and we have a range of prices here from $23 up to $35, average $30, $29.55 for a 12-month price target. But we want to scroll down on this chart here on stockanalysis.com and really see, based on the earnings from February 19th, what are the most recent recommendations, because that table at the top has some very old data. And we can see that 1, 2, 3, 4, 5, at least 5 of them have updated their price targets for IMAX on February 20th, $30, $32, $30, $32, $35. So let's just say an average updated price target for IMAX of $32 based on the analyst's expectations for the next 12 months. Keep in mind that for the movie industry, a PE ratio in the 20 to 25 range is the norm. And for those of you that are still learning this stuff, let's see exactly how this works out. With the forecast for 2025 highlighted in yellow over in the bottom right, $1.24 expected earnings over the full year of 2025. If we take that $32 average price target and divide it by $1.24 expected earnings, we get, guess what? A PE ratio of 25 at the high end of normal for the movie industry. And that is sort of how this valuation thing is done. Should you consider buying IMAX right now? If we think about those $32 price targets and the current price of $26.03, that implies about a 23% forecasted increase in price of IMAX. If it meets analyst expectations over the course of this year, if you think that the box office is going to be better than maybe these analysts, and maybe IMAX's revenues and earnings are going to be better, then maybe you do better than 23% return. We will have to see how this year goes, but for IMAX, with the movies going on in China right now and expectations for 2025 across domestic US and Canada, things are looking really good. So I will keep all of my fingers crossed for you. I don't currently have a position in IMAX. I'm looking for some opportunities that are a little bit better than 23%, but hey, that is a solid play for the year if you're looking for a kind of fire and forget play. I am expecting for a Q1 overall for the domestic movie exhibitors, Cinemark, Marcus, AMC, a very weak Q1. We're on track for only about a $1.6 billion Q1 if we're lucky. IMAX might be an outlier on underperforming in Q1 because they are having such a bang up year in China. If I see an opportunity for IMAX, if it pulls even lower than $26 based on Q1 concerns, maybe in the short term, a short-term pullback, I might look at that as an opportunity to pick up some IMAX for myself again. In China, CEO Rich Gelfand tells us that in the first 2 months of 2025, IMAX has already grossed more than the entirety of 2024. It's going to be a great year for them in China. They have more filmed for IMAX releases than ever in 2025, and arguably an even stronger slate ahead in 2026. It looks like full steam ahead for IMAX. Let me know down in the comments what thoughts you have, any questions or concerns. Thank you for watching all the way through. I am Tony Denaro, and I will see ya on the next video.